The strength of our property markets is underpinned by Australia's economic prosperity, and we know China's closely intertwined with our growth. However, with the economies of many countries faltering, stories of a property bubble in China arising and China's growth slowing, some people seem to be a bit concerned that the stumbles in China's economy could stunt Australia's economic growth. Hi, I'm Michael Yardney, and today I'd like to look at what's really happening in China and how it affects you and me as property investors. Firstly, you may ask, well, why is China growing so fast? Well, way back in 1978, after years of state control of all its productive assets, the government of China embarked on a major program of economic reform. In an effort to awaken a dormant economic giant, it encouraged the formation of rural enterprises and private businesses. It liberalised foreign trade and investments, it relaxed state controls over some prices, and it invested heavily into industrial production and educating its workforce. Now, this strategy has worked spectacularly well, and now the People's Republic of China ranks as the world's second largest economy. That's after the United States. Over the past 30 years, it's been the world's fastest growing major economy, with consistent growth rates around 10%. And China is also the largest exporter and the second largest importer of goods in the world. Well, that was in the past. What's ahead, and how's that going to affect you and me as property investors? Before I discuss what's ahead, I'd like to remind you that once again I'm going to be conducting my annual Property and Economic Market Update one-day trainings around Australia with property finance strategist Rolf Schaefer and accountant Ken Race. Now, you can get lots more details about this by clicking the link on the side of the page or at the bottom of this page. You see, 2012 is going to be a year of confusion and concern for many, and particularly for property investors. But it's also going to be a perfect time for sophisticated property investors, because the ultra successful have always found good opportunities in downturns. They've found opportunities to create wealth in these flatter and downturn markets, while the average Australian somehow or other seems to sit on the sideline just waiting for a recovery. Now, you've got a choice. You've got a choice of which of these two groups you're going to model. Sitting on the sidelines waiting for greater certainty, or taking action, taking advantage of some of the opportunities. But you also got to protect yourself. So please join me at these one-day trainings around Australia next month. Click on the links on the side of the page or down the bottom of this and find out more and come and join us. Back to what's happening in China and how this is going to affect us. Since 1978, hundreds of millions of Chinese have been lifted out of poverty. Yet there's still a big job ahead, with hundreds of millions of rural population, as well as millions of migrant workers still earning less than $1.25 a day. As China goes through its industrial revolution, it plans to move over 350 million people into cities in the next 15 years. If you think about it, this means they're going to be building the equivalent of 17 Australias. 17 Australias in the next 15 years. Now, that's a mammoth task, and as Australia's biggest trading partner, China requires massive resources to fuel this growth. Now, to put some perspective to this, last year ANZ's Paul Braddock suggested the following could occur in China between now and 2025. So in the next 15, 13 years, he believes 350 million more people are going to move into cities. 103 million have already moved there since 1990. 221 Chinese cities are going to have more than 1 million people living in them. The whole of Europe today has only got 35 cities with more than 1 million people. 1 million kilometres of new roads and 28,000 kilometres of metro rail are going to be laid. They're going to build 170 mass transit systems, twice the number that are in Europe today. Between now and 2050, 40 billion square metres of floor space is going to be built to construct 5 million buildings. They're going to build 50,000 skyscrapers. You know, they're buildings more than 30 stories tall. That's the equivalent of 2 Chicagos every year. 97 new airports are going to be built. Do you know what this means? 1 in 7 planes assembled by Boeing and Airbus are going to be delivered to China. They're going to use tons of coal. They're going to build 1 wind turbine farm every hour and a half. China is going to grow. What's happening now? Well, China's economy has been growing at around about 9% per annum, and it's going to drop a little bit this year, but it still means that the growth of in some of its cities, some particular parts of China, are more than double that. Interestingly, there are currently 16 cities the size of London in China. Cities I've never heard of. Have you heard of Changsha, Chengdu and Chongqing? Well, neither had I. What about Weifang and Wuhan? Cities like this are the backbone of China's 30 or so provinces, whose astonishing economic growth is largely responsible for keeping the world's economy in the black at the moment. For example, the economy of Shandong province itself is larger than those of several G20 countries. Now, this is not only creating a new middle class in China, but also a new group of very wealthy individuals. According to a study by the Julius Baer Group, one of the big international banks, China's millionaires account for about half the rich people across 10 major economies in Asia, and the number of millionaires in Asia, in that area from China, are going to more than double to 2.8 million by 2015. The number of millionaires are going to more than double. Okay, so what does this mean for you and me, property investors? What does it mean for Australia? Australia stands poised to capitalise on an economic transformation unparalleled in our nation's history, with the resources and commodities boom capable of generating $480 billion worth of exports a year and creating 750,000 jobs in the next 20 years. But there's more than just the resources boom. Currently, over 80% of our exports to China are resources. But if you look forward, China offers markets of enormous proportions to us for all the modern services that a developing economy like Australia has got to offer. We're in a prime position to supply the world's fastest growing major economy with food as well as a raft of products and services. Now, one other interesting thing, if we play our cards right, Australian tourism could be boosted as we become the playground of the new rich in China, who are going to want to holiday in a nearby country. Just as we were the preferred holiday destination of the Japanese in their heyday in the 1980s. According to the ANZ Bank, almost $2 trillion needs to be invested in the Australian economy for our nation to capitalise on the mining boom caused by this developing country. And remember, there's also India that's going to need our resources as well. While our economy will be underpinned by mining, the benefits are going to flow through to services, to education, to tourism, and to our property markets. Now, sure, there's going to be ups and downs and lots of problems ahead. However, we are indeed the lucky country, and our economy will remain the envy of the developed world. Back to the question I asked right at the beginning, what does it mean for us as property investors? While many factors affect the country's property prices in the short term, in the long term it's mainly two factors: population growth and the wealth of our nation. As I've explained in previous updates, strong population growth is a given. And as I've explained just now, so is our increasing wealth. I don't think anyone would argue that as a nation Australia's going to become wealthier. Australians are going to become wealthier too over the next 15 years. Australia is well positioned to benefit from the growth of Asia, which represents 50% of the world's population. We have vast resources that are going to be required by our growing neighbours, and we're at the beginning of the mother of all resources booms. Now, sure, some companies and their shareholders are going to become richer, but so will the average Australian. On many accounts, the average Australian is already richer than people living in most other countries. However, some people living in Australia just don't see that and they complain and protest. So in conclusion, while property prices are in a bit of a slump at present, that's just part of the property cycle. As the cycle moves on, and it always does, the combination of population growth and an increasing wealth, those two important things, population growth and increased wealth, are going to underpin the strong growth of capital city property values, just like they've done for decades. So if, like me, you're confident that Australians are in for a prosperous future, our current softer property markets could be an ideal time to add to your property investment portfolio. You see, I've always found it's a good time to buy when everybody else tells me property is a bad investment. Now's the time to get set for the future. You see, I expect more buyers to return to the market as the year goes on when they realise that prices aren't going to fall anymore and the world's economic woes are starting to sort themselves out. And I'm going to explain to you exactly what I'm doing personally when I'm joined by finance strategist Rolf Schaefer and tax expert Ken Race as we conduct our national property and economic update seminars in 5 states around Australia in the next few weeks. If you own a property or are thinking of getting into property or have any interest in property at all, please click on the links on this page and join me at these one-day trainings.